Well, folks, what a day we had yesterday. Two really important things. First of all, the ECB raised interest rates as expected. Previously, they'd been extremely hawkish, saying that they would continue to raise interest rates throughout the balance of this year, and that there was no sign or no reason for them to pause or even stop interest rate hikes. But in the press conference after this recent rate hike from 4 to 4.25%, Christine Lagarde said they are now being data-driven in their decisions, and they may or may not hike rates at the next meeting. They won't be cutting rates, but they might not hike rates, or they might hike rates. And I think if you read into all of that, and if you read into what's happening in the European economy, they won't be raising rates any longer this year. I think we'd be stuck at 4.25%. We talked about this in the last video, so if you want to have a look at that, go and check that out. I'll put the link at the end. And also, if you want to subscribe to the channel, just press the button that says subscribe and give the video a thumbs up if you enjoy it. So what that means is that the Fed is probably not going to hike for the rest of this year. They're at 5.25, ECB at 4.25, and we'll probably see that differential remain 1% in favor of the US, in favor of the US dollar. So we could see continued euro weakness going into the rest of this year. So having said all of that, and that had quite an effect actually on the markets overall. On the dollar, the yen pairs started to move down, and some of that strength went, instead of leaving the euro into the dollar, actually went into the Japanese yen. And that was a sort of a precursor of what was about to happen next. The Bank of Japan, at their meeting at about 5 o'clock this morning, my time, I didn't sleep last night, that's probably why I look a bit weary. They said they're not going to change the yield control curve, but they are going to be more flexible. In fact, what they actually meant was we are changing the yield control curve and allowing for moves up to 1% instead of their current fixation at 0.5. They're allowing for bond yields to go higher, and therefore there's potential strength coming into the US, into the Japanese yen against the US dollar, and across the board against the euro, the pound, the Swiss franc, Canadian dollar, Australian dollar, etc. We'll have a look at those shortly. The first thing I want to look at, however, is natural gas. So I know a lot of you won't actually watch this video unless I talk about natural gas, so I'm going to do it. But it's an interesting day anyway. And we've been hovering around this level for the last number of 4-hour candles at just above my previous entry level at 2.51. We got down to about 2.54 and pierced the top of this descending channel or bull flag, which is quite normal. So we broke up through there, hovered around into that resistance zone there. So we moved into this resistance level. It was likely after the breakout that we'd retest the top of the channel, which is exactly what we did. And often these retests just sort of pierce the channel top. It's just kind of designed to stop out those who are bullish. You can see these markets don't stop on a dime. You'd want the market to hold above the channel top, but it doesn't. It goes through it. And that puts a little bit of fear down through the support level as well, down through the moving averages. And what that does is it actually adjusts positions. Those who are long, getting out of their long positions on that breakdown through the top of the channel. Those who are looking to buy would have probably not bought because it broke down through there. And there's a lot of algorithm movement and stuff that goes on, which is designed to confuse the market and benefit the algorithms and larger funds who want to stop out retail traders and prevent them from getting in on the action. But what happened, we bounced back up and we closed above the channel top again. Few 4-hour candles, a little retest below, and a spike low. This is the current 4-hour candle that we're watching as I'm talking. We're now up at 265. My entry price is at 251. So we didn't get quite down as low as that. We came close. I know a number of you got into the market based on my previous video at this level. So well done for that. I could have added to my long position, but I didn't. I was happy with it for the moment. Perhaps in hindsight, I could have added a bit more to it. But a beautiful bullish candle. This is what we want to see. A wick low through support, failing to hold beneath the support, and a rush move. Look, we're above the 200 period moving average. We're now rushing up into the 20 and the 50, where there's a confluence and a crossover at that level at 266, 267. It's also the bottom of these candles over here. So this is a key level. If we can break through there today, then natural gas should get up to the top here again at around about 278. So that's going to be a super exciting move if we get it. And if we can get up there and hold above there into the weekend, then we've got every chance of moving up to this channel top. And that would take us up to about, just about $3. Fill that liquidity gap over there, the $3 gap between $2.90 and $3 roughly. That's this big gap here, as you can see. It's a glaringly obvious gap. It's also where the channel top is, and this red line which is at the $3 level. So if we can get up into this zone here and hold above there, we're going into the weekend, it's Friday. If we can hold up at this level at around 270 to 280 in that region, even better. I don't think it's going to happen today, but you never know. It might happen after a weekend gap. We could get up through that level and move on higher. So that's what I'm looking for, and so far it's looking really good. I like the wick. I like the fact that we held above support. I like the perfect level that we've turned around at. I like the fact that we've moved through the 200 period moving average. I love the shape of this candle. It's a huge bullish candle with a wick low. Doesn't get any better than that, folks. When you're trading natural gas, always look for reversal candles, wicks especially, and then also these bullish engulfing candles, dark cloud cover candles, piercing patterns, and all that sort of thing that you should be reading about in a book if you haven't read about it. And I'm going to point out to you something that you can read. Actually, two books. I don't know if you can see that. This is called Beyond Candlesticks, but there is another one. And you know what? I'm going to cover the Japanese yen in a separate video because this one's already too long. These two books here, I hope you can see them, by Steve Nissen. If you want to learn about candlesticks, get these books. I don't make anything on it. I don't know where you can buy them. I know you can buy them secondhand online. If you leave a message in the comments below, I'll try and put a link up for where you can buy these. They're not cheap. They're about $200. Maybe. I think you probably get them for $150. But really good books. And everything you need to know about candlestick trading is in these books. You only need to get this one, the basic one. Actually, don't worry about the other one if you can only afford one. Fantastic books. I've had these books for 20 years, not these ones. I lost mine. I rebought some more about a year ago. And these are beautiful books written by Steve Nissen about candlestick charting, which was invented, I think, in the 18th century, 1700 and something, by rice traders in Japan. That's why they're called Japanese candlesticks. So that's that. So that's where we are, natural gas. I think I'm going to leave this now and get this video up for you to have a look at. Let's see where we go. Look at that, moving up, surging up. This is lovely because it's in real time. We're now smashing up into that 20 and the 50 period moving average. Huge, bullish, beautiful candle with a wick low against support. And we're in the money. I'm now in the money quite nicely on this one. And for those of you who wrote to me and said you got in based on the last video I made at this level, at these lows, well done on that, because I think that's a really good entry price. It's not far off my entry price. So remember, we want to get up to somewhere around here today. Get through these moving averages, get through this base of this resistance and support area, through that green level top, up to this pink brownish area, up to these tops, and perhaps just peek through them up to the top of this green area. Maybe we can get to $2.80 today. I doubt it, but you never know. We've got the rigs report coming out a little bit later on. I don't know what that's going to say or what that's going to hold, but it doesn't really matter at the end of the day. What matters is that we've got to start here, and we've got some movement on the charts. The charts tell the whole story. They tell the whole picture. And there's a reason why the Japanese candlestick traders in the 18th century made fortunes trading the rice futures market using Japanese candlesticks, and especially when it comes to commodity trading. So let's have a quick look at the day chart. I know this video is a bit of a shambles. I didn't sleep at all last night, by the way. Not a wink, so I'm pretty tired. That's the day chart. It's an inside day. This is the NYMEX day chart, Henry Hub price. The rollover has occurred. Nothing dramatic happened on the rollover. In fact, nothing at all. No gaps, nothing weird. So all steady as she goes. So no panic there. This day candle today is just hovering around as an inside candle. We want this to become an outside candle. We want to get above yesterday's candle, and that would take us above $2.68 to $2.70. We want to get above yesterday's candle and hold above it. Remember, 268, 270. Looking at the 4-hour chart, you can see where that is. So there's 268, 270, that region there. We want to get above there and hold above there. But ideally, we want to get up to 274, 275 and go into the weekend at that price. We have a very good chance of getting up into 290 and then $3 thereafter. Failing all of that, remember, these are just probabilities. I think it's a good probability based on this candle action that we've seen today. But failing all of that, and if we don't manage to get through there, we're going to have to allow for a move all the way back down to the bottom of this larger channel. That would take us down to $2.40 and below that. And unfortunately, you have to allow for those possibilities when you're trading. Nothing's ever certain. You're always taking risk on when you take trades. It's the nature of the business. It goes against all human nature. That's why when you trade, you'll always find yourself in a constant state of having to fight against fear and doubt and greed, uncertainty, anxiety, emotional stress, all of those things which surround trading are caused because you're purposefully putting your money at risk every time you press the buy or sell button. The reason for that is because we don't know actually what's going to happen. We can only base it on probabilities. Probability based on this 4-hour candle is that we'll continue to move lower. That's it. Natural gas. Remember, this is a probability. It's not a certainty. So don't go putting all your money on this. Don't go all in to the moon, whatever the crowds say about it. It's not how it works. Trade this carefully, safely, sensibly, with risk control in mind, and don't put all your money into one basket. Take care. Have a fantastic weekend. And again, if you enjoyed this video, please give it a thumbs up. Really helps me. Tells the algorithms that you enjoyed it and that other people probably enjoy it too. And if you want to see more of this sort of stuff, subscribe to the channel. It'd be really great. Got some people arriving for some tea, so I'll have to go. Speak to you soon. Bye.